Story contains complex conflicts and sensitive situations. Viewer discretion is advised.
It was a Thursday night in early October when my sister showed up with 2 suitcases and a manila envelope stamped by Wake County Family Court. I had just shut down my laptop after finishing a compliance report for work. By the time I opened the door, she was already standing on my porch under the yellow light soaked from the rain and staring past me into my living room like she was checking square footage. Before I could ask a single question, my phone buzzed. My mother's name filled the screen. I let it ring once, twice, then answered. She didn't ask how I was. She told me Melanie had nothing left. The divorce was finalized that afternoon. The house was his. The joint accounts were frozen. The lease on her car had been transferred back to her ex-husband's name. And until she could get back on her feet, she would be staying with me. I stood there holding the phone, my sister still on the porch, my mother's voice steady and practical in my ear. It wasn't a request. It was a decision that had already been made. My name is Claire Whitman. I'm 32 years old. I live in a 2-bedroom townhouse in Raleigh, North Carolina, and I work as a licensed CPA for a medical supply company that serves hospitals across the state. My license, my credit, and my reputation are the foundation of my livelihood. I've spent the last decade building a life that is predictable, documented, and legally clean. That night, I realized how quickly someone else's collapse could be redirected into your file. Melanie walked inside without waiting for me to step aside. She placed the manila envelope on my kitchen counter like it was proof of something official. Divorce decree, property division summary, a short-term spousal support statement that ended in 30 days. I glanced at the first page and saw her new legal status in black ink. Dissolved. She didn't look broken. She looked inconvenienced. Our father called 10 minutes later. He used the same tone he used when he used to remind us about dentist appointments. Calm, logistical, already decided. He said families step up. He said I had space. He said Melanie just needed time. Then he added something that sat heavier than the rest. She's your responsibility now. I asked what that meant in practical terms. Rent, utilities, food, legal fees. He didn't answer directly. He said I was stable. He said I had always been the responsible one. He said this was temporary. Temporary is a flexible word. I gave Melanie the guest room. I brought out extra towels. I cleared a shelf in the hallway closet. I did not ask how much debt she carried. I did not ask whether her attorney had warned her about post-divorce liabilities. I told myself I would gather information first, make a plan later. As she unpacked, I noticed something small but precise. She changed the mailing address on her banking app while sitting at my kitchen table. I saw my townhouse number appear on her phone screen before she tilted it away. She didn't ask. By midnight, 2 of her bags were still unopened, and my quiet, controlled home felt different, not louder, just occupied in a way that didn't involve my consent. I lay awake that night thinking about something most people never think about until it's too late: the legal weight of an address. In North Carolina, your residence ties you to more than just a mailbox. It connects you to registrations, contracts, vehicle records, service accounts. I know that because I audit compliance reports for a living. Paper trails don't care about family stories. They care about names, dates, and signatures. The next morning was Friday. Banks were open. Courts were open. The world was functioning normally. Nothing dramatic had happened. No one had shouted. No threats had been made. And yet I had the distinct sense that something had already shifted. I poured coffee into 2 mugs out of habit. Melanie took hers without looking up from her phone. She said she'd need to transfer her driver's license address soon. She said it was easier if everything pointed to one place. She said it casually, like she was talking about changing a profile picture. I nodded. I didn't argue. Because in that moment, I wasn't trying to win. I was trying to understand what exactly my parents had just assigned to me. I didn't know yet how far it would go, but I knew this much: when someone tells you another adult is your responsibility, now they're not talking about a spare bedroom. They're talking about liability. And I had the uneasy feeling that my name was about to appear in places I had never agreed to. The following Monday, the mail arrived in a thicker stack than usual. I left for work just after 7, the sky still pale and unfinished. By the time I returned that evening, 3 envelopes with Melanie's name were sitting on my entry table. 2 were from banks I didn't recognize. One was from the North Carolina Division of Motor Vehicles. I carried them into the kitchen without opening them. They weren't addressed to me, but they were addressed to my house. Melanie was on the couch scrolling through listings for short-term furnished rentals, though she hadn't toured a single one. She said she was trying to compare prices. She said it was smart to have options. When I asked if she had officially changed her mailing address, yet she nodded and said it was easier to centralize everything in one place. Centralize. That word stayed with me. On Tuesday afternoon, while I was in a compliance meeting at work, my phone vibrated with a voicemail notification from our homeowners association. I listened to it during a break. The property manager explained that a vehicle registered under my address had accumulated 2 parking violations over the weekend. The license plate was unfamiliar to me. The car had been parked overnight in a visitor spot without a permit. I drove home early. The SUV in my driveway wasn't new, but it wasn't temporary either. It had North Carolina plates and a registration sticker dated for the current year. I asked Melanie how long she planned to keep it there. She told me the lease had been adjusted during the divorce, and she needed to update the registration details. She said she'd used my address because it was where she lived now. I asked whether she had informed the insurance company. She shrugged. That evening, I logged into the HOA portal and saw the violations posted under my unit number. The fines weren't catastrophic, but they were attached to my property file. Repeated citations could lead to formal warnings, even liens, if left unresolved long enough. I paid the first fine online to prevent escalation and made a note to clarify the vehicle's status. On Wednesday, a certified letter arrived requiring a signature. The return address listed a regional bank in Charlotte. Melanie signed for it before I reached the door. Later that night, I saw the envelope opened on the dining table. It contained a notice regarding a past due balance from a credit card that had once been joint during her marriage. The balance had been transferred solely to her after the divorce. The letter confirmed the creditor had updated her contact information. My address was printed beneath her name in bold. I went upstairs and pulled a copy of my own mortgage statement from my desk drawer. My name, my property, my address. Clean, precise, documented. I placed it beside the credit notice on the table and looked at the 2 pieces of paper side by side. They shared one line. On Thursday morning before work, I checked the Wake County property database. The townhouse remained solely in my name, no changes, no filings. I printed the confirmation page and placed it in a folder. When I returned home that evening, another envelope was waiting. This one was from a different lender. Pre-qualification offer. It referenced recent address update. Melanie was in the guest room on a video call. I heard her mention that she was rebuilding and needed short-term liquidity. She did not mention my name. She did not mention my consent. I began to see the pattern. The shift wasn't dramatic. There were no raised voices, no ultimatums. It was administrative, incremental. Each update, each form, each change of address added another layer connecting my residence to her financial history. On Friday, I stopped by the DMV on my lunch break. I waited in line behind 2 college students and a contractor renewing his commercial registration. When it was my turn, I asked what documentation was required to change a vehicle's registration address. The clerk explained that proof of residence and identification were sufficient. No additional authorization from a property owner was required if the person claimed to reside there. Residency, once declared, carries weight. That night, as I sorted through the week's mail, I realized something simple and unsettling. Nothing Melanie had done so far required my signature, just my address. I had always understood risk in terms of numbers on a balance sheet. Now I was watching it attach itself through something less visible and far more durable location. I didn't confront her, not yet. I needed to understand the full perimeter of what had been set in motion. Because once an address becomes the address of record untangling, it is never as simple as crossing out a line. 2 Sundays after Melanie moved in, we drove to our parents' house in Cary for dinner. The subdivision looked the same as it always had. Wide driveways, trimmed hedges, the kind of neighborhood where everything appears managed. My parents had set the table as if nothing unusual were happening. My mother had made roast chicken. My father had opened a bottle of wine before we arrived. Melanie sat across from me, composed, her hair pulled back neatly. If a stranger had walked in, they would have assumed she was simply between apartments. Halfway through dinner, my father shifted the conversation. He asked about my work first, about hospital contracts and audit deadlines. Then he asked how Melanie was settling in. My mother added that rebuilding takes structure. That was when the proposal came. They had spoken with a financial advisor, my father said. Short-term liquidity would help Melanie stabilize her credit profile. A personal line of credit modest just enough to bridge the transition. The bank would look favorably on a co-signer with strong credit history and steady income. He looked at me when he said that. I asked for specifics: loan amount, term length, collateral. My father said the amount was reasonable. My mother said it would only be for a year. Melanie said it was procedural, nothing dramatic, just paperwork. I asked whether the lender had already run her credit. She hesitated before answering. She said they had done a preliminary review. She said adding a co-signer would improve the rate. The word improve was doing a lot of work in that sentence. My father leaned back and mentioned something he rarely brought up directly: the investment account my grandparents had established years ago. It was not a trust in the strict legal sense, but it was a pooled family account managed under my parents' discretion. He said they had always intended to distribute it fairly. He said families operate on reciprocity. He did not threaten to remove me. He did not need to. The implication was precise. Participation now would reflect commitment later. I told them I would need documentation before considering anything. I asked for the lender's name, the terms in writing, and confirmation that the debt would remain solely Melanie's obligation. My father nodded, but his expression shifted. My mother cleared plates before dessert was finished. Melanie spoke then, not defensively, but with a kind of quiet urgency. She said she had already lost the house. She said the divorce decree transferred several joint liabilities into her name. She said she was trying to rebuild, not collapse further. No one raised their voice. There was no accusation. But something had changed in the room. The narrative had been framed: I was stable. I was solvent. I was the logical solution. On the drive back to Raleigh, Melanie scrolled through her phone. I asked which bank she was working with. She gave me the name of a regional lender headquartered in Charlotte. I recognized it from the certified letter that had arrived earlier in the week. When we got home, I opened my laptop and searched the lender's site. Their application guidelines were straightforward: debt-to-income ratios, credit tiers, co-signer requirements. None of it was unusual. What unsettled me was the timing. Within hours of that dinner, an email notification appeared in my inbox from one of the credit monitoring services tied to my professional identity protection plan. It wasn't an alert about new debt. It was a soft inquiry notification, an informational check associated with a lending institution. The institution's name matched the one my sister had mentioned at dinner. Soft inquiries don't affect your score. They also don't appear by accident. I reviewed the details. The inquiry had been logged earlier that afternoon, while we were at my parents' house. I closed the laptop and sat there for a long moment. There are ways a lender can verify the strength of a potential co-signer before formal paperwork is filed. Preliminary checks. Data pulls tied to an address or publicly available financial information. None of it required my signature, not yet. The pattern was widening. First the address, then the vehicle registration. Now a lender touching my credit profile. On the same day, my parents presented a solution. On Monday morning, I printed the inquiry record and placed it in the same folder as the property database confirmation and the HOA receipts. The folder was getting thicker. I had not agreed to anything, but I could see the framework being assembled around me. And frameworks once built have a way of becoming expectations. The following Thursday, just before 9 a.m, my phone lit up during a quarterly compliance review. I was seated in a glass conference room at our office near Blue Ridge Road, listening to a discussion about vendor documentation, when the notification banner slid across my screen. It was from the same credit monitoring service that had flagged the soft inquiry days earlier. This one wasn't soft. I excused myself and stepped into the hallway before opening it. The alert stated that a new credit application had been submitted listing me as a co-applicant. The lender name matched the regional bank my sister had referenced at dinner. The status read pending verification. I read the line twice to make sure I wasn't misinterpreting it. Co-applicant. I did not recognize the loan number. I had not filled out any forms. I had not provided my social security number to anyone in my family in over a decade. I called the number listed in the alert. The automated system routed me through a series of prompts before I reached a representative in their underwriting department. I provided my identifying information and asked whether my name had been formally attached to an application. The representative confirmed that an online submission had been received earlier that morning. It listed both Melanie Whitman and Claire Whitman as co-borrowers. The file was incomplete pending additional documentation. I stated clearly that I had not authorized any such application. The representative told me the file would be flagged for review and that no approval would be issued until verification was completed. She also informed me that once an application enters their system, it remains in internal records regardless of outcome. That sentence stayed with me. Internal records. I returned to the conference room and finished the meeting. I took notes. I answered questions. No one there knew that my name was currently sitting inside a lender's system attached to a debt request I had not agreed to. When I got home that evening, the SUV was gone. Melanie was in the kitchen reviewing documents spread across the counter. There was a printed loan application form among them. I recognized my name before she tried to turn the page. I asked whether she had submitted anything listing me as co-borrower. She said she assumed it would be easier to include me from the beginning, rather than amend the application later. She said it increased the likelihood of approval. She said it wasn't finalized. Finalized. The word felt carefully chosen. I asked whether she had entered my personal information. She said most of it was publicly accessible through prior joint filings, and that the lender only required confirmation. She spoke as if it were an administrative shortcut, not a boundary crossed. I told her the lender had already contacted my credit profile. She said that was standard procedure and that nothing had been approved. Nothing approved does not mean nothing recorded. That night I logged into my credit bureau accounts and confirmed the hard inquiry had posted. Unlike the earlier soft pull, this one would affect my score temporarily. It would remain visible to other lenders. I printed the confirmation and added it to the folder upstairs. The folder no longer fit neatly inside the drawer. On Friday afternoon, I received an email from our company's internal compliance system, reminding employees to disclose any personal financial disputes that could present conflicts of interest or reputational risk. The reminder was routine, triggered by a quarterly audit cycle. Still, it read differently that day. As a licensed CPA, my professional standing depends not only on criminal history, but also on financial integrity. Repeated delinquency judgments or disputes tied to my name could trigger reporting obligations to the state board. I looked again at the loan alert on my phone. Melanie had not shouted. She had not demanded. She had simply included me. The pressure was no longer abstract. My name was circulating in a financial process I did not initiate. The lender system now connected us in a way that required active correction. Over the weekend, my parents called to ask whether I had reviewed the paperwork. My father said the bank was waiting. My mother said delays could complicate approval. I told them I was still gathering information. For the first time, the timeline did not feel open-ended. It felt scheduled. And I could see with increasing clarity how quickly expectation turns into assumption and assumption turns into documentation. Arrangement into a formal timeline. When my father called that evening, he said I was making this legal when it didn't need to be. He said paperwork creates distance. He was right about one thing. Paperwork does create distance. That was the point. By the end of that week, nothing had exploded. There had been no dramatic confrontation, but the ground had shifted. For the first time since Melanie arrived, the structure of the situation was no longer defined by expectation. It was defined by record. 30 days passes faster on paper than it does in a house. By the second week after I served the notice, Melanie stopped pretending the timeline was flexible. She began making more phone calls from the guest room with the door closed. I heard the words temporary hardship and reconsideration more than once. On a Tuesday afternoon, I received another call from the lender's fraud review department. The representative confirmed that my notarized affidavit had been added to their file and that the internal investigation remained open. She asked whether I intended to pursue further action regarding the unauthorized submission. I said I was documenting everything. That was true. Later that evening, a courier envelope arrived addressed to Melanie from the same lender. It contained a formal request for clarification regarding the co-borrower discrepancy. The letter stated that misrepresentation on a financial application could result in denial and possible reporting. Melanie read it at the kitchen counter. She did not look at me while she did. The following morning, I received a certified letter of my own. This one was from the lender's compliance division confirming that my name had been removed from the application and that the file had been reclassified under a single applicant review. It also noted that the matter had been referred to their internal risk assessment unit. The language was neutral. The implications were not. That same week, I filed a formal incident report with the Raleigh Police Department regarding unauthorized use of my personal identifying information. I did not request immediate prosecution. I requested documentation. The officer at the front desk asked for copies of the credit inquiry and the affidavit. I provided both. He entered the information into the system and gave me a case number. A case number is not a verdict, but it is a record that something occurred. When I returned home that evening, Melanie had printed apartment listings and spread them across the dining table. For the first time since she arrived, she was calculating rent instead of assuming it. She said she had spoken to our parents. She said they believed I was overreacting. She said filing reports could damage family trust permanently. I told her the timeline had been clear from the beginning. 3 days before the 30-day mark, my father called again. His voice was measured, but there was strain beneath it. He said I was escalating matters unnecessarily. He said lenders often make clerical errors. He asked whether I understood how serious a police report could become. I told him I understood exactly how serious a loan application could become. On the 30th day, Melanie did not leave. She said she needed more time. She said moving logistics were complicated. She said I was putting her in an impossible position. The next morning, I went to the Wake County Courthouse and filed a summary ejectment complaint. The clerk reviewed my notice to vacate, confirmed the dates, and scheduled a hearing. I paid the filing fee and received a stamped copy of the complaint. When I walked back to my car, the air felt colder than it had that morning. This was no longer documentation in a folder. It was a scheduled court date. Later that week, the lender notified me that the investigation into the original co-borrower submission had concluded. The application under Melanie's name alone had been denied due to inconsistencies in the file. Denied. The denial did not erase the inquiry on my credit. It did not repair the strain in my family, but it confirmed that the lender had taken the discrepancy seriously. Melanie received her own letter that same day. By the time the court date approached, the atmosphere in my townhouse had shifted from assumption to countdown. Every conversation revolved around logistics boxes, storage units, alternative addresses. I had moved from reacting to correcting. The consequences were no longer theoretical. They were scheduled, documented, and moving forward regardless of whether anyone in my family approved. And for the first time since this began, the direction of events was not being set at my parents' dining table. It was being set in offices with stamped paper and recorded files. The court hearing was scheduled for a Tuesday morning at 9. The Friday before, while I was reviewing vendor contracts at my desk, my phone rang from a Charlotte area code I now recognized immediately. It was the lender again, this time from their internal risk department, rather than underwriting. The man on the line introduced himself as part of their compliance team. He confirmed that the original joint application had been formally closed and that my affidavit remained attached to the file. He then informed me that due to discrepancies identified during review, the matter had been escalated internally for potential reporting under federal lending regulations. He did not elaborate. He did not accuse. He simply documented. He asked whether I had any additional information to provide regarding how my name had been included. I said that everything I had was already submitted in writing. He thanked me and ended the call. Within an hour, my father called. He did not mention the lender by name, but he asked whether I had spoken to anyone else. His tone was tighter than usual. He said banks take misstatements seriously. He said investigations create records that follow people. I told him that records already existed. He said I was jeopardizing Melanie's ability to recover financially. He said that once something is flagged in a compliance system, it can affect future applications. He was not wrong. That was precisely why I had acted. Over the weekend, Melanie barely spoke to me. She stayed mostly in the guest room making calls I could hear through the door, but not the content. On Sunday evening, she came downstairs with a printed email in her hand. The lender had denied her individual application following review of material inconsistencies. The letter referenced prior submissions and stated that future applications would require enhanced verification. Enhanced verification is a quiet phrase. It means scrutiny. Melanie placed the paper on the counter and said nothing. For the first time since this began, she did not frame the situation as a misunderstanding. On Monday afternoon, I received a separate email from the lender confirming that my consumer file reflected a dispute resolved in my favor, and that no outstanding financial obligation connected me to the denied application. Resolved in my favor. The phrase carried weight, but it did not undo the weeks that led to it. That same afternoon, an email from our company's HR department appeared in my inbox. It was a routine annual disclosure reminder asking licensed staff to confirm that they had no unresolved financial judgments or pending legal disputes that could impact professional standing. The timing was coincidental. It did not feel coincidental. I completed the disclosure form that evening, attaching documentation showing the dispute had been formally addressed. I did not wait for questions. When Tuesday arrived, I drove to the Wake County Courthouse alone. Melanie arrived separately, and our parents were already waiting outside the courtroom. My father's expression was controlled. My mother looked tired. The magistrate called our case mid-morning. The hearing was brief. I presented the notice to vacate and confirmation of service. Melanie acknowledged receipt but asked for additional time citing financial hardship. The magistrate reviewed the dates and the documentation. He granted possession effective within the statutory period and issued a written judgment. No speeches, no drama, a stamped order. Outside the courtroom, my father said I had forced this into a public matter. He said once court records exist, they cannot be erased. He said family disagreements should not end in judgments. I told him that unauthorized loan applications also create records that cannot be erased. He did not respond. By the time I returned home that afternoon, the house felt suspended between occupancy and departure. Cardboard boxes lined the hallway. The SUV was parked half-packed. The lender had documented the discrepancy. The court had documented the tenancy. Everything was now in writing. Nothing had been resolved emotionally. Nothing had been repaired. But the options had narrowed. For the first time since my sister arrived on my porch, the structure surrounding this situation was no longer informal. No longer assumed. It was procedural, and procedures move forward whether families are ready or not. The written judgment arrived by mail 3 days after the hearing. I was home when the envelope slid through the slot. It was a standard court mailing from Wake County, the seal printed in the corner, the language procedural and brief. The magistrate had granted possession. The order specified the date by which Melanie was required to vacate. If she failed to comply, the sheriff's office could enforce removal. The words were direct. They did not sound like family. Melanie read the order at the dining table, where she had once spread out loan documents. This time, she didn't argue about fairness. She asked whether I would really involve the sheriff. I told her I hoped it wouldn't come to that. Hope was not the same as retreat. Our parents arrived that evening without calling ahead. My mother stood near the doorway, looking at the boxes already stacked against the wall. My father asked to see the order. He read it slowly, then folded it once before handing it back to me. He said that eviction records follow people. He said landlords conduct background checks. He said this would complicate Melanie's ability to secure housing. I told him that unauthorized financial records also follow people. He didn't disagree. The next morning, Melanie contacted a property management company about a one-bedroom apartment in North Raleigh. I overheard her confirming income documentation requirements and application fees. For the first time, the conversation revolved around her own eligibility rather than my signature. 2 days later, she informed me that the application had been conditionally approved pending a guarantor. That word landed heavily. Guarantor. She said the leasing agent had run her credit and flagged the recent loan denial. The property manager required either a higher security deposit or a co-signer with verifiable income. She said she had already spoken to our parents. By that afternoon, my father called again. He said he would consider acting as guarantor if the terms were reasonable. He asked whether I understood that pushing Melanie out without support would reflect poorly within the family. I said that the lease agreement was between the tenant and the landlord. The choice of guarantor belonged to them. Later that week, the leasing office emailed Melanie a draft agreement listing our father as conditional guarantor subject to income verification and a credit check. I saw the document on the kitchen counter when she stepped outside to take a call. For the first time since this began, my name was not on the page. I did not feel triumph. I felt accuracy. On the final day before the court-ordered deadline, the townhouse looked different. The guest room was nearly empty. The SUV was fully loaded. A stack of forwarding address forms sat near the door. Melanie handed me a copy of her new lease confirmation. The guarantor line contained our father's name and signature. No additional co-borrowers. That afternoon, I sent a brief email to the lender's compliance contact confirming that no further clarification was required from my side, and requesting written confirmation that my file was closed. I received a response stating that the matter had been archived, with no adverse reporting attached to my profile. Archived is not erased, but it is contained. When Melanie carried her last box to the car, our mother stood in the driveway holding her purse against her chest. There were no speeches, no reconciliation, only logistics. The sheriff's office never had to come. The order existed anyway. As the SUV pulled away, I walked back into the townhouse and closed the door. The silence that followed was not relief. It was the sound of a structure reset to its legal boundaries. Nothing about this felt victorious, but for the first time in months, every document in the house reflected a single fact. The responsibility that had been assigned to me had returned to where it originated. 3 weeks after Melanie moved into her new apartment, my parents asked me to come to their house again. This time, there was no set table, no wine already opened. My father sat at the kitchen counter with a folder in front of him. My mother stood near the sink, arms crossed tightly as if bracing for impact. The folder contained paperwork from the investment account my grandparents had started years ago. Statements, allocation summaries, a typed letter drafted by their financial advisor. My father slid the letter toward me and said they had decided to restructure the account. He said it would now be designated solely for Melanie's long-term stability. He said circumstances required prioritization. The language was formal, the meaning was simple. I would no longer be included. I read the letter carefully. It did not accuse me of wrongdoing. It did not mention the eviction. It did not reference the loan denial or the affidavit. It framed the decision as an adjustment in light of family needs. I asked whether this decision had already been executed. My father said the paperwork would be finalized by the end of the month. I nodded and handed the letter back. There was no argument to make. The account had always been under their discretion. There was no contractual guarantee attached to my name, only expectation. Expectation had expired weeks earlier. Over the next several days, I learned through extended relatives that the narrative circulating within the family was uncomplicated. I had escalated a private hardship into legal action. I had prioritized documentation over loyalty. I had made things public. No one mentioned the loan application that carried my name without consent. No one mentioned the inquiry on my credit. Those details were administrative. They did not fit the story. At work, my annual disclosure confirmation was acknowledged by compliance without further inquiry. My credit score stabilized after the temporary dip from the hard inquiry. The documentation I had filed remained in my folder, now thick and complete. Meanwhile, Melanie's new lease required my father to submit proof of income and undergo a credit check as guarantor. I learned this indirectly when my mother mentioned that the property management company had requested additional verification due to recent financial activity. The phrasing was careful. Recent financial activity. My father's tone during our next call was different. He did not speak about loyalty or family reflection. He spoke about deposits, guarantor obligations, and the possibility of higher liability if rent were missed. He had stepped into the role he once insisted was mine. By the end of that month, the restructuring of the investment account was complete. I received a final statement confirming my removal as a beneficiary under the advisory arrangement. The document was clean and professionally formatted. I filed it with the rest. At Thanksgiving, I was not invited. A cousin texted to say it might be better to let things cool down. I responded that I understood. That evening, I ate alone at my dining table in Raleigh. The house was quiet in a way that felt earned, not empty. I did not feel victorious. I felt the weight of subtraction. In choosing not to carry someone else's financial obligations, I had also stepped outside the informal protections of my family. Access to shared assets, access to gatherings, access to the assumption that blood outweighs documentation. What remained was simpler. My name was no longer attached to Melanie's applications. My credit file reflected a resolved dispute. The court record showed possession restored to the property owner. My parents now carried the guarantor line on her lease. Nothing about this felt dramatic. It felt exact. The boundaries I had drawn were holding, but they had cost me a seat at a table I once assumed was permanent. 6 months after the court date, the paperwork stopped arriving. No more certified envelopes, no more credit alerts, no more calls from compliance departments asking for clarification. My credit report showed the hard inquiry, aging backward, its impact fading month by month. The dispute notation remained archived, marked resolved. At work, my annual license renewal went through without issue. The state board processed it electronically, just as they had every other year. No additional documentation requested. No follow-up questions. The absence of interruption felt earned. Melanie's lease continued under my father's guarantor signature. I learned through a brief phone call with my mother that the property management company had required an increased security deposit after the denial on her previous loan. My father had covered it. He did not frame it as sacrifice. He framed it as obligation. There were no more conversations about me stepping in. In early spring, I refinanced my townhouse at a slightly better rate. The loan officer reviewed my file and commented that my credit profile was clean, with one resolved inquiry tied to a previously disputed application. She asked if there was anything I needed clarified. I said no. The refinance closed in a quiet office on a Tuesday afternoon. I signed my name once on documents that reflected only my income and my property. Afterward, I drove home through neighborhoods that had not changed during the months my family did. I began volunteering twice a month at a financial literacy nonprofit in downtown Raleigh. The organization offered workshops for women navigating divorce settlements, credit rebuilding, and housing transitions. I did not share my personal story in detail. I focused on explaining how credit files work, how guarantor lines function, how documentation protects you. Every participant signed their own name. No one was assigned to anyone else. My parents and I speak occasionally now. Conversations are shorter, more factual. The investment account no longer comes up. The court order no longer comes up. The topic of responsibility has been redistributed without discussion. Melanie remains in her apartment. Rent is paid. My father remains listed as guarantor. No one has asked me to reconsider my role. The folder in my desk drawer still exists. It contains the affidavit, the inquiry confirmations, the court judgment, and the final lender email, stating my file was archived without adverse reporting. I have not thrown it away. Not because I expect it to be needed again, but because it reminds me what documentation can do when expectation becomes pressure. When I lock my front door at night, there is no second key in circulation, no forwarded mail addressed to someone else, no pending application waiting for my signature. The house feels proportionate to my life again. Responsibility, I have learned, is not something assigned by volume of need. It is something accepted by consent. And consent, once withdrawn, changes the architecture of a family more than any argument ever could. If you've ever had to draw a line that cost you something, I'd like to hear how you handled it. Share your experience in the comments. If this story resonated with you, consider liking and subscribing. There's another conversation coming soon about what happens when boundaries hold.